Hey traders, welcome to this video. I just thought I would do one on the S&P 500 E-mini futures markets. Everyone's looking at it and with good reason. Don't forget you can join my live trading room underneath this video. The links are there. So S&P 500 futures market, no matter what US index you're looking at the moment, you can start off by doing it on your monthly chart. Now clearly there is very strong long side bias to the upside. Okay, that's why traders currently are buying and buying and buying right at these highs. Okay, now I'm going to tell you both sides of the coin. We started off, as many of you know, down here. We spoke about it long. We returned back here. We spoke about it long again. Okay, so in each instance, what we searched for was retracement. So that was your pullback there. And then you've had this. Many will name this really as harmonic patterns and things like that. But whatever way you arrive at that judgment, the facts for support and resistance and probable zones remain the same. And that's what you saw around here. So this was your really ideal long zone. Okay, you're smashing into your key moving averages here. You're bouncing onto what is key support, given all of this price rejection. Okay, if you look at all the candle wicks, and it became very much more probable that price would rebound. And of course it did. So that formed the basis for our long entries here. Now, we killed those off. We're out of those longs, and that move really is coming to an end, in my opinion. And the reason why is for the following. So firstly, when you look at these long zones we had, and like I said, you will notice, as I labeled it, there is various levels of support. So that was our reference point to get long. Now, if you look where we are now and you look to the left-hand side, you can see there is no reference point for shorts. Okay, and this is what spooks people a bit and gets them a little bit worried about trading these kind of runaway markets. Now, there's a good way to deal with this. Okay, now you've got to understand that the market is rallying, and we can drop down timeframes now to something like the weekly. It's doing this because, people are believing the markets are recovering. They're sort of believing there's going to be a soft landing. You've got your Fed meeting tomorrow, which could provide some direction or market volatility. We'll look ahead to that. But at this point, you've got to understand that you've gone up for so many weeks in a row. Okay, let's count them. 1, 2, 3, 4, 5, 6, 7, 8, 9. And then this red candle does practically nothing because it brings you to this really early support. And then you've got 4 more straight up. Okay, so literally in a row, sort of like 15 weeks. Okay, now if you look back, when was the last time you had that many candles up in that sort of strength with one red candle? Okay, and I mean just one. Not very often. Okay, so you've got to remember there's going to be institutions. Okay, there's going to be professional traders who are sat there with lumps and packets and bags of money on the table. All right, now, it is always the case that in markets, after a rally, you get a significant fall. That has never not happened. If I zoom out, you can see that, it has never not fallen eventually. The reason why you had such a rally off from COVID is because the fall preceding it was so heavy. Therefore, when it rebounded, you got this massive move up. Now, the reason why the fall was still heavy here is because, again, you had a massive move up. Okay, so this big fall causes that massive springboard rally as there's extreme optimism because it comes off the back of one of the worst falls ever, or maybe the worst fall. And then you've got your pullback, which still takes you from 4,800 to 3,500. Now, you haven't had a significant move down for a very long time. You basically had no retracement. The biggest fall you've had is 100 points, right? And like I said, there's no reference to the left-hand side. So at this point, the market is rising and rising on that positive sentiment. We know at some point it's going to fall because it always does, and it always has. It's just when it's going to fall. Now, you don't know exactly when that's going to be, right? Nobody does. However, we know it's an ultimatum. We know it's going to occur. So what I tend to do is a series of things. Okay. If you look over here, you can see we're overbought. We're well up. So clearly it's not a good time to buy. And if you want to know why, go to your monthly. Okay. Does it really look like it's a good time to buy, given it's the highest price ever? Would you buy something at the most expensive price possible normally outside of the markets? When you go out to buy something, do you say, can I just pay you the most? No. You're always looking for a pullback. So that's exactly what you would need. Okay. Whether it's an early support level like this first or a further early support level there, okay, you would need some kind of pullback to affirm that entry, essentially, is what I'm saying. Okay. So when it does pull back, yes, you could then buy on long-term optimism, but you definitely don't want to be buying now. So that's number one. Now, number two, as a factor, like I said, you don't know exactly when it's going to stop. You know when it has stopped already, it hasn't gone an awful long way. Okay, in some cases, freezing, like you had 12th December to 18th of Jan, so just over a month, and you just went sideways. Now, this was great for our hedging method in our academy because it allows you to accumulate profits to eradicate anything you got wrong previously. You could have done the same thing here. Okay, these breaks in play are fantastic because you can hedge. And as long as you can hedge in the right proportion at the right time throughout the days, you can gather enough profit to be able to short these and short these highs, even though they're rallying against you. So that's just an extra tip, and perhaps something as well. Number two, an extra thing you could include, because like I said, it always happens. If you don't get a big fall, you at least get a stall, and that allows you to take advantage of sideways price by hedging the markets. And it's the best way to trade, really, in my opinion. That's why I do it myself for income, and I don't use stops, because if you're using stop losses on a rally like this, like I said, you're just picking the last stop and it hasn't stopped. So you would have been wrong so many times. So that's why I'm now led on to my third point, which is scaling in. If you're going to short this, all right, you don't want to do it every 50 points. Space it out. If you're going to short now, plan to short again, maybe 150 points higher. Okay. And if you're going to short again after that, plan it much higher. Spread the net out wide. Okay. Because you don't know when it's going to stop. And the more you spread it out, the more likely it's going to be you catch the fall overall with a lower risk, which leads me on to my next point. Okay. If you're going to spread those positions out, make sure they're light. Okay. If you're going to short here and short there and short there, do not take heavy positions banking on this falling tomorrow at the FOMC meeting. Okay. Because you don't know what's going to happen. You don't know when it's going to fall. You just know it's an inevitability. Okay. And you can see how your moving averages have always been returned to eventually, more or less. That's because within trends, you get continuous retracements back to moving averages, particularly strong trends. Now, the last point, okay, number 5, is not to preempt news. Like I said, you've got FOMC tomorrow, you've got the Fed meeting. You don't know what they're going to say. They could say anything, okay? And the market could move up higher if they say something that prompts it that way. So never just short this trying to hit a home run. Never say to yourself, I'm going to sell a massive lot because I know it's going to fall, okay? Because you just don't. So that's how you trade the S&P safely. We'll brace for the news. We're going to cover it in our live room as the news comes out. You can get that underneath. Thanks for watching, guys. Trade safe, trade small. See you in the next one.